Hello everyone, hope you're doing well. Welcome to the first and inaugural episode of Altcoin Thursday. Assuming there's enough appetite and engagement and demand for this type of thing, we'll try to make it a recurring segment where every Thursday we'll just talk about altcoins. The way Technical Roundup is currently structured, it has a lot of different bits of content to keep you going through the week. I think it's quite complete if this becomes a permanent feature. On Monday, you've got Monday Markets with me, which is kind of a fast-ish, high time frame overview of Bitcoin, ETH, and any relevant legacy markets. On Tuesday, we have the newsletter, trletter.com, which covers Bitcoin, ETH, altcoins, sometimes the S&P, some educational stuff, kind of a written format. And the system we use there is quite interesting because essentially when Don and I can come to a reasonable consensus of a conservative swing trading system, that's probably the best way to define and describe what the newsletter is. Then on Wednesday, of course, you've got the live stream with Don, very engaging, and he normally runs circles celebrating his positions, but it has been very valuable and educational, and it's also the only sort of live bit of content we do. Thursday will be for altcoins, again, assuming you guys want it, so let us know. Friday is Casual Friday, more podcasts, more chill out, more banter or attempts at banter, as well as the roundup of the news, which is kind of helpful towards the end of the week. And then maybe we'll do Hold Your Shaft Saturday, given we're holding your hand throughout the week as it is. Maybe if you go take a piss, you just go on our channel and we'll help you do that as well. So yeah, that's kind of what we're dealing with. And if you have any comments, feedback, criticism, concerns, complaints, I mean, if you're complaining, what the fuck is wrong with you? You know, we're losing money doing this. But anyway, we'd love to hear from you. So for this episode, I think the way I'm going to run it is I will have a watch list ready of coins that I think are cool. I want to discuss things that are particularly strong, weak, at good levels, have a lot of volume, have a lot of attention on Twitter. That's probably one of the ones I want to zero in on. You know, when there's a bunch of shilling going on Twitter about a certain coin or a rotation or a sector, we can actually look at it in somewhat objective and rational terms and discuss whether it's all just hype, you know, is this shilling at resistance? What type of setups may come from it? And what have you. I do want to start the first episode of this series by actually giving you a bit of a framework, as the title might suggest, as to how we think about altcoins. I mean, Don's probably different. He thinks all sorts of random shit and makes 10 zillion times better trades than I do. But nonetheless, the kind of altcoin framework that I think is reasonable when considering this. So I've got 10 points here. It's technically more than 10 because I've got a couple of elaborations, if you will, but I think we need to sort of set some sort of a base of sorts when discussing altcoins. What are the assumptions imbued with trading altcoins? How do we view them? Rotations, BTC pairs, all this type of stuff. So essentially, we lay the foundation as to what's a reasonable way to think about this sector and trading around it and implications to your portfolio, risk management, etc. And then with this base set, we can just refer all the new people to this video so they know what the fuck is going on, and then we can just focus pretty much on charts for the following weeks, knowing that people aren't going to do anything too stupid, hopefully. So here's the framework and the 10 points I want to discuss. We'll go through them fairly quickly, and then we'll jump to the charts. I know it's tempting to just skip this video to the charts part. I wouldn't do that because the valuable part isn't just drawing a line and saying if it breaks above here, it looks good, and all this type of stuff. I think understanding how to trade altcoins as far as kind of portfolio theory, for lack of a better term, is much more valuable for the weeks and months and maybe years to come, more so than drawing a line and a breakout and basic TA stuff that you know anyway from consuming Technical Roundup content. So enough chatter. Let's get into it. The first point, rather self-evident, but when you're trading altcoins, you're essentially expressing a leveraged view on two things, specifically on Bitcoin direction and Bitcoin volatility. And that also applies to ETH or other majors, but primarily, given I'm a boomer who used to trade altcoin Bitcoin pairs, and that used to be all the rave, I just chose Bitcoin as the example here. So what do I mean by expressing a leveraged view on Bitcoin direction and volatility? Typically speaking, whatever position you take in altcoins is basically like applying leverage to the same position in Bitcoin. So as per point 2 here, you get a sort of market beta effect, where if Bitcoin is up X%, altcoins will be up more than X%. And typically, if Bitcoin is down X%, altcoins will be down more than X%. And the same applies obviously to volatility, among other things. So you need to know what you're trading. Even if you are a pure altcoin trader, you have to have some overarching understanding of where Bitcoin is and where the majors are and the high time frame levels and volatility and price expectations for those, because otherwise you're missing at least half the picture, and that's not a particularly good way of looking at it. So There are exceptions to this kind of beta type relationship, and the main one is when you get anonymous price or anomalous, not anonymous, anomalous price action from shorter term catalysts or news trades, such as if the market really isn't doing much, you've got your standard correlations, and then you get like a Musk tweet or some sort of announcement, or the team launches some sort of partnership, or someone or something gets hacked. Far more common than all the others. You can see the market decouple in the short term as participants act on that type of catalyst. But overall, as a sort of baseline framework, the market beta effect is one worth being aware of. So you're essentially trading Bitcoin with higher leverage and more volatility. Now, the implication of that is that on average, your risk is higher if you're wrong, and your reward is higher if you're right. So again, if we take the basic example of Bitcoin is up 5% and a generic basket of altcoins is up 10%, if you're long the generic basket of altcoins as opposed to Bitcoin, well then your returns are higher. Well, of course, that also works conversely, which is to say that if you're long a basket of altcoins and Bitcoin goes down, you're not just going to be down whatever Bitcoin's down, you'll probably be down more. And obviously there are practical considerations that affect this mechanism, especially if we start going out further out on the risk curve with some of these lower market cap, lower volume altcoins, the ones typically shilled on Twitter. You run into concerns about liquidity, which is an umbrella term referring to volume, depth, and basically an all-encompassing term for market impact, which will affect your fill prices. Be that if you're trying to enter, if you're trying to execute a market stop order where you might slip relative to where you thought you were getting out, which can have big implications for your risk management, and all sorts of things in that area. Now, what are some good conditions for altcoins? When might we expect altcoins to do well? I think the following is a good starting point, and of course there are exceptions and different circumstances within the cycle, but generally speaking, you want Bitcoin to be generally strong, and that acts as an indicator of market health. And when Bitcoin looks strong, you see that risk flow out further on the curve. And by the curve, I mean the risk curve, where Bitcoin is kind of your safe boomer asset as far as crypto goes. You might want to say that's stable coins, but we're just going to exclude that for the sake of analysis. Bitcoin is your boomer, stable, safe coin. Then you go ETH, and basically as you move down the market cap list, the market caps and the liquidity and the security and all this other stuff, the risk profile, that, to use a very hand-wavy term, increases. So market cap down, risk profile up. And so if the big strong coins, the ones we like to use to measure the health of the industry as some sort of barometer or to get an understanding of flows, if those are doing well, there's a higher likelihood that that money will trickle down or rotate, or whatever verb you want to use, to the more speculative parts on the market. Another scenario in which altcoins do well is, of course, generally speaking, when Bitcoin is moving up as per the middle point. That's the classic beta effect of Bitcoin is up X. Altcoins will generally be up more than X, and we'll talk about that correlation in a moment. The reason I've got an asterisk there is because there have been some exceptional scenarios. Some of them have been quite recent, where Bitcoin goes up, but it goes up so much and so quickly that it kind of sucks the air out of altcoins. It kind of acts as a liquidity vacuum, and everyone ends up chasing Bitcoin, meaning even altcoins which on average have this beta effect of, higher pumps when Bitcoin pumps, bigger dumps when Bitcoin dumps, that correlation breaks in the short term because the market is FOMO chasing Bitcoin, or there's some anomalous strength there. So Bitcoin moving up, yes, is good up to a point, just as long as you don't get caught in those typically short-term rotations where it just sucks the air out the room. And the final one, and of course, this is a non-exhaustive list, just trying to give you some sort of baseline, is when Bitcoin consolidates after a move up or in an uptrend in general. So when market participants feel good and safe about Bitcoin and expecting the volatility to kind of fall off there a little bit without it being too scary, you might see flows rotate toward alts to catch up, or just to trade those as more activity shifts to further out on the risk curve. So all of those, or some combination of those, are things you want to see. And obviously the inverse of these is true as well. What are bad conditions for altcoins? Bitcoin is weak, the market's dumping, everything just turns into a correlated basket of shit. Now, some general principles when it comes to altcoins. And again, this is by far the least exhaustive one of all, but just some of the main points you'll see me reiterate through and through is that strong stuff, on average, will continue to be strong. And if you keep longing laggards, that more often than not ends up being a trap. And the best way to think about it is just almost from first principles, is these things are lagging for a reason. If coin A is strong and coin B is not as strong, there's probably a reason for that, especially if it's a persistent trend. So if you just start buying coin B instead of coin A, by definition, you are exposing yourself to the weaker coin out of the two. Now, of course, there are exceptions to this, and there are some valid catch-up plays and so on and so forth, but this was most pertinent and prescient in 2021, where people just refused to buy, Sol, Luna, AVAX, Axie, all the stuff that was mooning back then. Obviously a very sad list to look back on now, but a lot of participants left a lot of money on the table when those things were the cream of the crop. Is that even an expression? I'm just making up idioms now. Whatever. When those things were the shit, to use a more rude colloquialism, a lot of traders would just refuse to buy the pump or convince themselves that it already pumped too much, and instead were looking at things that they thought were lagging. Now, lagging a lot of the time is just another word for weak. If you want exposure to the upside, you want to, on average, be buying strong coins, not weak coins. Unless, of course, you've got some edge in anticipating a really meaningful narrative rotation, so on and so forth. With these things, it's best to just take the market at face value sometimes. Like, this thing is probably strong for a reason, especially if it's been the case for days and weeks. At the very least, my attention is going to start there. As I mentioned towards the end, some phases will be sectoral or narrative driven, where you see like a basket of layer ones doing well relative to other altcoins, or GameFi, whatever the fuck that is, doing better sort of as a sector relative to other altcoins, exchange coins, metaverse memes, whatever it may be. You will see sectoral rotations in the altcoin market depending on conditions. Other times you just get pure dispersion, where it's just basically random shit, which is largely unrelated, make up the strongest coins at any given point. So also worth being aware of that dynamic. Another point I wanted to address, this one used to be much more common, less so now, is the up in USD meme. So some kind of lore or history here. Back in the day, which was only like 3-4 years ago, but in crypto terms, that's a lifetime, altcoin linear futures didn't really exist. And they weren't popular and weren't widespread. Altcoin USD pairs, in the same way, didn't really exist, weren't particularly popular. And if you were trading altcoins, by definition, you were trading altcoins against Bitcoin. And so what a lot of people would do is they would buy altcoins. And again, these were alt BTC pairs. So you're essentially assuming that whatever altcoin you buy is going to outperform Bitcoin, because otherwise the trade just doesn't make any sense, right? It's not a USD trade. You're trading BTC for alts and alts for BTC. So your metric should be, are you outperforming Bitcoin in order for that trade to make sense? What people would do is they would buy altcoins, they would go up because the market's going up, and they would say, I'm up in USD. Meanwhile, they were underperforming Bitcoin and or ETH, primarily Bitcoin at the time, because alt-ETH pairs weren't a thing. It was literally just Bitcoin. And so that's where the up in USD meme came from. It's from people underperforming just Bitcoin by being long altcoins and coping with that fact by saying they're up in USD, even though they didn't have any alt USD exposure in the first place, because that wasn't a thing. They sort of came out with less gains in BTC than if they had just held BTC. So while that's slightly less relevant now, as I said, with linear futures and all this other stuff, it is worth checking your alts against BTC and ETH to make sure you're not taking on more risk for less reward. So if you're making less money by holding less liquid coins and not holding boomer coins, and just by taking on more risk for fewer returns, what the fuck are you doing? So at the very least, you want to make sure, if you're going to have exposure to the upside that's not BTC and ETH, that it's worth the additional risk you're taking on. Because otherwise, if you can just hold BTC and ETH, what's the fucking point? So that's something worth bearing in mind. And that's not to mention, there is a lot of utility in looking at alt BTC pairs and alt ETH pairs for technical levels, contextual levels, potential rotation levels, take profit levels on USD pairs when there's no resistance, but there is on the BTC pair, and a bunch of stuff I'm sure we'll get to eventually. A couple of traps I want to talk about. I'm not talking about my personal life for a change here. The first is a correlation trap. And this is something you'll see in new altcoin punters. They'll say, oh, well, I'm long 5 altcoins, but they're all 2% risk. And so they'll assume, and I know this sounds absurd to learned ladies and gentlemen of the channel, but this is very common. They assume just because they have 5 altcoin positions, each at 2% risk, they'll see their net risk as being 2%, which is completely wrong. You're essentially long with 10% risk, given the strong positive correlation between altcoins. You know, if they pump and you're long, you're going to make money on all those positions. To varying degrees, yes, perhaps, but generally speaking, that's what your P&L would look like. And in the same vein, if you're wrong on the broader market and you're long all those altcoins, None of them are going to save you or hedge you out or do anything like that. It's completely kind of correlated. It's like one big correlated position at that point, and you get shafted by all your positions. They're all probably going to get stopped out at the same time. And I sort of hinted to point number 8 in the previous point, is the sort of hedging or diversification trap. And this is also fairly common, where you'll hear like, oh, I'm long 5 alts from X sector, but I'm also long 5 alts from Y sector to spread my risk or diversify or sort of just try to sound smart. Now, from the available evidence, for most times in the market, inter, as in between, altcoin correlations aren't a thing, given the aforementioned strong positive correlation between altcoins. The simplest way I can explain it is, on average, in general, they will all pump together and they will all dump together, regardless of sector, utility, governance, this, that, and the other. Yes, you do get short outlier periods or whatever, but especially past a certain volatility threshold, you're not going to be hedging altcoins with altcoins, especially if you're trading them in the same direction. This kind of macro TradFi style sectoral dispersion, hedging, whatever stuff just doesn't exist, because it's all one big correlated basket of shit for the most part. Now, as far as hedging goes, and this is again, I'm sort of repeating myself here, but it's also becoming fairly popular, is I've seen a lot of evidence of traders hedging long positions they might have by shorting alts or vice versa. That can be okay, but you're essentially sort of creating a synthetic pair trade or a spread trade of sorts. The issue is it can get tricky depending on the synthetic pair you've created. So, you might say, I'm still long $1,000 of this coin and short an equivalent amount, $1,000 of that coin, and voila, I've set up a synthetic pair that way. The issue is stuff can kind of get wonky if you don't account for volume, volatility, liquidity, if you jump too much in market cap, if you pick out outliers, or just the market's a bit weird in terms of how one of the coins specifically performs and how that affects your synthetic pair, it gets a bit wonky. So if you've got no idea what you're doing with these synthetic trades and you're not sticking to the higher market caps at the very least, or have a clear reason for doing so, just don't do it. I know it makes you feel really clever and intelligent, saying, oh, well, I'm hedged this and that, and I'll take off this hedge and let this run. But for the most part, if you're not very confident in that, then you're better off just trading your existing positions and closing, re-entering, doing all that type of stuff, rather than adding more positions when trying to offset risk of existing positions. That's something you either know very well, or I think on average for most people it's best to avoid. The last point I want to make is regarding invisible altcoin resistance levels, and bit tongue-in-cheek, but essentially invisible altcoin resistance levels are very visible BTC and ETH resistance levels. So, for example, if your altcoin looks like it's got no resistance overhead and it broke out and it's going to move to infinity, and then the next hour, day, week, whatever, you see a big fuck off red candle, and you might think, well, this doesn't make any sense. Cred lied in his TA videos. He said there's no resistance, and the breakout's going to do this, that, and the other. Most of the time, if you take a look at BTC and ETH, what will have happened is, yes, well, on its own terms, the altcoin chart may have looked like a clean breakout. If that clean breakout took place at the same time as a move into resistance on BTC and ETH, then that was your resistance level. Again, going back to the point that these things are so strongly correlated, it doesn't matter how good the breakout on your altcoin is. If Bitcoin and ETH move sufficiently, that will affect your altcoin positions. So don't take the altcoin chance, talking about fucking singing here. Don't take the altcoin chance for granted, or sort of on their own terms in a vacuum. You must always consider them as part of what's going on in the majors, or at least having some awareness as to where the key high time frame levels are. And just setting some alerts, or having even a peripheral understanding of where the majors are at, so you don't buy 10 alts at resistance or sell them at support, is probably a fairly good starting point. And yeah, that's kind of all I've got. If you've got any questions about these, let me know in the comments, or stuff you want us to cover, either on Altcoin Thursdays or Casual Friday, and we'll get to it. But I was just sitting around and thought I'd jot down a few things that perhaps I take for granted, but are worth expressing in writing as well. And if you actually sat through my rambling here while you just wanted the altcoin charts, know that I appreciate you, and it means a lot that you watch the entire video and not just the lines on charts. Now the lines on charts. As far as BTC and ETH go, we're going to skip those, because hopefully you watch Monday Markets and you watch Don's stream and you read the newsletter and all that, and the point of these live streams is, for a change, not to talk about those. So the way I'm going to do this is, I've got Altcoin Thursday's watch list, as I mentioned, of stuff that looks sort of technically interesting, and then we can just revisit it next week to see how it's developed, or even maybe a quick catch-up on Casual Friday, whatever form that might take. The first one is BNB. There are a couple of, there's one level and one range that I find particularly interesting on here. In terms of the level, it's this 328 daily range high. That should be fairly self-evident as far as technical structure goes, where you had sort of range high. This is around the FTX implosion, drama, blow-up stuff. Ended up being a deviation, and now the market's trading at that range high again, coming off the back of one of those diagonal consolidations. As you know, I'm generally not a fan of double fakeouts, and given we've already had a fakeout at this level, I think if you start getting daily closes above the 328 handle, that'd be pretty good evidence of a range higher reclaim and then continuation higher. Now, in terms of continuation higher, I think the next area to look out for is this 360 to 450 range, which you can just splice up into range high, range low, range midpoint, and all those levels are seemingly sort of price sensitive or relevant for the current marketplace. So I think it's a good one to keep an eye on as the kind of the first trouble area if the range high is reclaimed. So relative strength on BNB, good. In terms of technical structure, it's at daily resistance now, but I think unless it just pukes below or does something wonky, as long as the next daily closes don't turn around or just find acceptance above 328, I'm comfortable making a case for continuation towards the range low at 360 at the first trouble area, and then we can reassess the developments within this range. And again, thankfully, now that we've done the whole boring notepad talk, which if you skipped, shame on you, because that's much more useful than the rest of this video, frankly. But if Bitcoin nukes and ETH nukes, etc., obviously all this shit gets invalidated, but having set the groundwork, you know that, so we can more or less just talk about the levels themselves. The next one is Solana dollar. This is particularly interesting to me on the weekly time frame because there is emerging evidence of a weekly reclaim around the $24 handle. If I can get a handle on this browser, that would be even better. So this is going back to the consolidation, which has been haunting this market ever from last summer. You had range high at 47, you had range low in the 20s, and then the range midpoint comes in at 36 or thereabouts. And if we look at the weekly closes, this has been an absolutely rapid and aggressive move from the lows. But again, as I've said before, there's no point loitering around thinking, oh, what could have been? I should have bought it here, done this, that, the other. Your job as a trader is to come into the market and ask, what can I do today? What's relevant right now for me to trade? Because you're trading now. You're not trading 2 weeks ago or 3 weeks ago, however long it's been. To that point, I think as long as you don't get any weekly closes back below the range low at this sort of 24 handle, and if this weekly reclaim sticks, it just looks like a range reclaim, right? Sort of our standard TA. You've got range high, range low. When the range low gets reclaimed, you typically target the range midpoint and the range high. Assuming, again, usual disclaimers, the market doesn't nuke, this, that, watch Bitcoin ETH, all the stuff you hopefully learned from the little notepad exercise we did. As long as this reclaim sticks, I think just trading into this supply zone and the pre-nuke candle makes sense, especially because it lines up with the range midpoint. And then we can just anchor our expectations to this $47 to $24 range and go from there. And if we look at that on the daily time frame, the structure is slightly messy. The closes here have been pretty garbage, as the French like to say. But I am comfortable, at least in the short term, kind of boxing out this mini consolidation at $22, $23. If this is a real reclaim, it shouldn't be printing any daily closes below that. So that's kind of definitely on my watch list for Solana to see if there's follow through on this weekly time frame reclaim. And the daily level that's relevant there is like sort of $22-ish. Litecoin is another one. We need to FUD Don out of his position at this point. So I've decided to start hallucinating lines on charts that might act as resistance and shake him out before it goes to all-time high. We know that's never going to happen, but given he's been shilling his bags and for him there's no resistance until $10,000, understandably, I'd feel that way too if I bought the Pico bottom and everyone was calling me dumb on Twitter and now you get to take endless dunks and clout rounds around them. The kind of tagging onto this trade has been a very tricky endeavor because as far as visible pullbacks go, there really haven't been any. I think anchoring expectations based on this weekly pre-breakdown consolidation might be useful. So essentially, it's at resistance now, but what you're looking for is a Solana style weekly reclaim. So close above 100, and as long as that doesn't get stuffed, and again, that is resistance not only from a technical point of view, but sort of psychological round number, take profit, oh my god, I made so much money point of view. If you start getting weekly acceptance back above 101 or just through the 100 handle, I think the range midpoint at 115 and the range high at 130 become the relevant date, sort of levels to trade within that range. I'm not sure if there's, so like, if it starts to pull back here, I'd probably just give it some room to breathe, because it would be a pullback from weekly resistance. So I'd be less comfortable just tagging on risk at the first daily support. I mean, maybe if the market is really, really strong, you can get away with that. But generally speaking, if the market's going to react to weekly resistance, I like to give it a bit of space. So that's, we can sort of revisit this daily structure to see what we get if this weekly time frame does something as far as resistance goes. But if it doesn't, reclaim there, and even in the range midpoint, you can see there's a nice double top there as a confluence area or target or what have you. But otherwise, I mean, this thing's just been very uptrendy, so I think waiting for more evidence of strength, should it emerge, is sensible. Also, just with these altcoins, I think primarily for the audience's sake, I'm not going to talk too much about short setups, because just that's how a lot of people blow up. They just think they learn how to short and do it on altcoins and don't consider how hard these things can squeeze and how to position for them, and they'll put on a bunch of correlated positions at once and just eat shit, and it's just not a great exercise. And also, we'd prefer to incentivize people to, if they're going to trade spot, so they don't increase or introduce any liquidation risk or margin risk. Maybe we're just overly conservative boomers here, but similar to the newsletter, if I think something looks bearish, I mean, I'll say so, or at least say what I'd like to see for it to start looking good. But generally speaking, it just makes life easier if we sort of focus on either continuation setups or long stuff, or what you'd want to see, more so than sell every resistance level. Again, that doesn't mean the commentary going forward will be biased by any means. It's just I don't want to be that YouTuber being like, oh, short this now, and then the next day there's a 20% candle, which by definition will just fucking wiped everyone out. So not particularly interesting and not as relevant. But of course, again, if it looks like shit, I'll tell you it looks like shit. As far as ape goes, that also made the list. I mean, this has just been marching up on the weekly time frame. No visible pullbacks yet. I think if there is going to be one, from a market structure point of view, I wanted to hold $5, $5.50. If you wanted to be cheeky with it, you could just box out this range high as a cluster or as a consolidation between 5.1 and 5.7. I think anything deeper than that just starts to look less constructive in terms of market structure. If you consider this as an important range high, supply zone, whatever, if it pukes through there, it will just look like this, and then that will look like a deviation through resistance, and it will just start to look pretty rough. So I think, in following the weekly trend, if there are going to be pullbacks, it has to come up to the $5 handle, but no deeper. And there's been some good response there for the time being. And I think the daily time frame adds a whole lot of color. It's basically the same idea. I mean, you can just even eye test where this previous range high came in and see that there's an attempt to flip that. So that makes sense. As far as targets, if the market gives continuation or as long as it's above $5, and again, the rest of the market doesn't look like shit, macro, legacy, yada, yada, nukes flying, I think that there's sort of the weekly range high confluence and just at this high here at around $7.50. That's a big weekly swing high. You've got some consolidation here that's relevant from past price action. Kind of just makes sense as a first trouble area. So that's ape. I don't think there's anything particularly relevant on the 4 hour. It's just been very churny and choppy. Decent response from the weekly levels, but yeah, I think intraday it just starts to look really kind of meh. You can lose your mind trying to trade this, but I think a weekly time frame view in terms of the market structure levels and the sort of range highs it has reclaimed adds a bit of clarity. And this is that $7 range high we spoke about, simply the highest weekly close, which hopefully makes sense. Aptos. This is an interesting one. We wrote in Technical Roundup, is it a breakdown or bait? It seems at the moment the answer is bait because it closed below and then the next day is daily engulfing higher, which is cool. So I think for this coin, if it's going to offer another short squeeze, and again, that's an if because it's offered like 10 trillion of these. But if you're looking for continuation and just to ride more momentum, I don't think it can lose the range low it is now reclaimed at around $17-ish. I mean, maybe a dip into this mini consolidation if there's some real volatility in the majors as low as 16.3, maybe. But generally speaking, this was the support structure. It tried to break down below it, and now it's reclaimed it. So if the chart stays clean, for lack of a better term, this should be the deviation, and then continuation should be, I mean, towards the double top at least, and then God knows, depends how people short it, get aggressive, or whatever else. You know that I don't like double deviations, so if the entirety of the market rolls over and starts looking like garbage, and there's acceptance below 17.2, if it gives a decent invalidation at whatever high is put in, I might give that a stab towards the daily support at 12 to 13, but that's sort of jumping the gun a little bit. All my idioms are so violent. Give that a stab, jumping the gun. I need help. In any case, if you can't tell, I've been losing my mind recently. Given I give sort of precedence to the daily time frame here, I just think at the moment there's evidence of it looking like a failed breakdown. There's going to be continuation. This should be the deviation 17-ish as your support structure, and then setting targets for this thing if it starts to really pick up is tricky, but double top and then maybe just leave some on. If the market does just nuke, really the only daily structure I think worth discussing is the one at $12 to $13, because otherwise it just kind of went up and didn't even consolidate. If you recall the pattern of impulse, consolidation, impulse, the consolidation is at $12, $13. So if there is a real breakdown, as far as short-term potential bounce spots, even just purely for intraday trading, it's basically this consolidation where they'd have to originate, which is again between $12 to $13. So reclaim, cool. Let's see if it squeezes. If it starts, if this wasn't the deviation, then that'll be a completely different setup. OP is one we wrote about in Technical Roundup is being bullish on Tuesday. So go to trletter.com and subscribe and whatever, help us out, or don't, whatever. It's fine. We don't take it personally. I mean, I do, but Don is just far too chill. So this is one of the few coins. I mean, it's at all-time highs, right? That's a pretty big deal. That's a good sign of strength. And it's also just recently breaking out from a consolidation between $2 and $2.40, and it's just been chadding ever since. So if the market crashes for whatever reason, your pullback area to have alerts for is the pre-breakout range from $2 to $2.40. $2.40. That just makes sense. Because again, if it's like an impulse, consolidate, impulse type of structure, and it gets pulled back by weakness in the majors, as we've discussed, some version of this range has to hold. Either you kind of scout it out on the daily closing basis, either at the range low or back above the range high, or just if it nukes and it's at support, that could just be a scalpable bounce in its own right. As far as getting on board now that it's broken out, that's always going to be a lot trickier. The two options that come to mind if you don't get the high time frame retest is you either just have to wait for some new consolidation to form and try to position within that range, usually on lower time frames targeting continuation, or you hope for some sort of short-term open interest flush spike, whatever, and the first candidate for that would be at around $2.60, this wick before this kind of inefficient diagonal price action. If you get a wipeout there and then strength that doesn't look like it's going to give you a retest of the higher time frame area, you might just have to settle for that at around $2.50, 60, and what have you. Again, it's always tricky when the market just breaks away from these high time frame levels without retesting, but generally as a rule of thumb, you go on lower time frames, you see if the lower time frames will give you some sort of range. If it doesn't, then you look at those same time frames to see where's the inefficient price action, or what's the lower time frame pullback structure if it's not going to be the higher time frame pullback structure, and you try to do business there. There's also other stuff you can do, like the daily open strategy or whatever, but I'm behind on making videos on the Cred channel, so you'll have to wait for those. Phantom, this one's pretty tough to talk about because I wanted to include it in last week's newsletter, but it just felt like we were including too many alts, and of course this one ends up turbo mooning. At least we got OP, just not Phantom. The basic premise here is a weekly time frame breakout through 40 cents, and I think the next level resistance is closer to $1 as far as the weekly time frame goes. There are some lower time frame trouble areas sort of on the way, which we'll talk about, but if we're just talking weekly time frame, I mean, it's just the range high at 90 cents or thereabouts that makes sense. No pun or rhyme intended. And on the daily time frame, again, it's just been one of those Chad trends that doesn't really pull back, to be honest. If we look at the daily time frame for guidance, like, if you subscribe to the argument that, this is like a reasonable weekly trouble area and you want to catch some portion of this, again, provided the rest of the market, yada, yada, you know how this goes. We can look at how it's behaved on the way up and basically look for recreations of that in one form or another. So again, it's a similar pattern of it's just been impulse, kind of 1 or 2 ranging days, continuation, impulse, 1 or 2 ranging days, continuation. So I think quite reasonably if during the course of this week you start getting similar 1, 2, 3 down days, which don't end up violating market structure, or if they do, they get easily reclaimed. That would probably be appropriate. The same considerations apply in terms of just going down to the intraday timeframes. A lot of these are just fairly straightforward, kind of range high breakouts, 4-hour engulfing candle, whatever. I'm not going to hindsight educate you on this type of stuff, but it comes back to the basic principle of if you have a high time frame breakout that's unlikely to let you in on high time frames, you need to engage with the market on low time frames and just apply your trading tools, be it ranges, consolidations, daily opens, clusters, whatever, on those lower time frames to get on board, as long as it's risk defined in one way or another. I mentioned that the weekly makes sense closer to $1. Are there any daily fuckery areas before that? I would submit that there are. The first one is basically this pre-breakdown consolidation at 70 cents or thereabouts. It's sort of this last little bounce before it nuked. That's a decent sort of intra-week first trouble area that might give you the type of pullback that will actually facilitate an entry before continuation for the most part. But yeah, this is just a very aggressive trend. If you're going to want to engage with it now that it's moved away so far from the high time frame levels, it'll have to be on lower time frames. Yeah, I don't think I'm going to make up anything else to add on that. As far as DYDX goes, why won't you? There we go. Similar story, weekly time frame breakout. As long as it doesn't start closing back below $2.50, which would be absolutely hideous. This looks good. It's been relatively strong. I am cognizant that there is like an arguable case to be made for resistance at around $3.60 to $3.80. I think it's fine. It's not one I'd like to short personally. I'd prefer a push into close to $4.50, given that provided the bigger bounce as opposed to this mini cluster. But there is some structure here. Now, again, this is one of those that basically ran away from you on the higher time frame level breakouts. You're going to have to probably engage with it. I mean, if it pulls back, sure. I mean, at least you'll be risk defined, and you know that, if it doesn't hold 2.5, you try to get in as close as you can to that, and if it doesn't hold, well, fuck it, it's going to 0. But otherwise, in the absence of that type of retrace, this is another one where you're going to have to engage with it on lower time frames. Usual stuff applies. If FTM style, you start to get a daily consolidation here, your usual stuff applies. Inside day low, any spikes, any failed breakdowns, any reclaims, all of that, I think, as long as it's risk defined, which all these setups share in common, is probably fair game. As far as intraday goes, I mean, essentially same considerations. What you're looking for essentially is a low time frame setup that's, well, technically clear and something you know how to trade, but it's also risk defined. So that if you do, if you get an entry somewhere around here, but it ends up pulling back to the higher time frame level, you don't just hold it from your entry to the higher time frame level, because then what if that fails and you completely eat shit? So you're looking for some sort of range to form, some sort of failed breakdown, some sort of daily open strategy, some sort of previous day's low fake out, all stuff I've written about or made videos on, whatever. You're looking for intra-daily to sort of 4-hour price action above the breakout level to facilitate an entry now that the breakout has taken place. Yeah, and I mentioned resistance. Yes, there is some of it. As early as $3.60. I think the bigger one is at $4.30, but this kind of mini supply cluster thing is worth bearing in mind as well. Final one is AVAX. There's a bunch of news floating around as far as Amazon using blockchains and NFT stuff, and people are speculating because there's some fucking wacky AWS partnership that it's going to be AVAX. All this stuff doesn't matter. It's just smoke and mirrors. Price go up. Great. As far as levels go, on the weekly time frame, the most important close was probably a couple of weeks ago with this market structure reclaim. This is the high that preceded a lower low, and then we closed above it, which is nice. As far as daily levels go, I've got 21.35 as a decent pivot. I say decent because I'm not fully sold on it. But as far as your eye test goes, you should kind of start to carve out sort of why this level exists. Support here, resistance, support, resistance, resistance, and now the market's trying to break above it. No daily close yet. I think if you get an impulse through the 21.30 area, as long as it doesn't start closing back below this kind of pre-breakout cluster, again, $20, $21, whatever, this might just be a straightforward continuation trade through the pivot. If it does, I mean, that idea is cooked. But in any case, I think this is the inflection point I'm watching at 2130 for something useful to form. And when I say something useful, again, not using deliberately ambiguous language, I don't know whether you are a breakout trader. I don't know whether you get your entries on low time frames. I don't know if you like to trade consolidations after breaks, and that's why we kind of talk about all of it, so that you've got a broad toolkit available to you. I would say this is the lower kind of probability ones, or one that I'm not as convinced, at least not as clear as some of the others. But it's a decent little level at 2130, and I think a strong daily close through here. And as long as it doesn't fail the consolidation that preceded that type of daily close, should it come, I think that will, that's a decent clearance type of level. And then my eye is then just drawn to basically some version of the range high closer to $30 or thereabouts. So that's also on my watch list for this week. That's it. I'm going to shut up. If you enjoy Altcoin Thursdays, please leave a like on these videos, comment and say yes, torture yourself every week to speak to us about coins that you don't like. And I'm losing my mind. We will deliver. But yeah, seriously, if you want to, if this is helpful, both from an educational point of view or in terms of watch list point of view or anything of that nature, I mean, thank you for all the engagement and comments and all that type of stuff on the previous video. That's why this video exists. So now hopefully you are convinced that there is a direct feedback mechanism between what you comment, like, subscribe, and tell us, and then what happens in reality. But yeah, this is obviously the trial episode. So if you think this show is garbage, tell me, and we'll pretend this never happened. If you want to see other stuff, let me know. And again, this is for you, so if we can make it better, great. That's all from me. If you like the video, do all the YouTube stuff. I'm going to shut up and try to do something productive. Take care. See you for Casual Friday tomorrow. Goodbye.